Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
I know. It's been a while. I apologize. I think like a month I haven't done a show. A little bit longer, actually. I think June 25th was my last show, and I'm recording this July 28th. So more than a month, and I have a very good explanation. I had a lot going on in July. I had a lot going on. If you're watching on YouTube, then you will immediately see that I am in a different place. Different office, same company. I'm with Town Bank Mortgage, as you heard in the disclaimer. But the place that I was recording was an empty office. It was a little bit of movie magic. That was not my office. And I was using it for not only this podcast, but also my interview podcast. There's a different part of the office that I could use. I guess good news is that we're hiring. And so we hired people that needed that office. And so I had to get out of it. And so now I am actually in my Town Bank Mortgage office recording this podcast. So this is actually where I work. Isn't it lovely? Here's what's driving me absolutely crazy. So I'm not a visual person. I mean, I know that nowadays you have to do video. I've always been on kind of board with it, but I'm an audio guy. Like I'm a radio guy. I love radio more than I love the audio portion of it. But I understand the importance of video, hence doing these videos. And there's this giant window behind me. And while it's gorgeous, like just every day doing things, it sucks for podcasts because for those that don't know, you never want to have a shot backlit because it will drown out the subject. And so I have high-powered lights on me to kind of counter because it's summer, so it's still super bright outside. And so this big backlit window behind me is going to drive me nuts. So as we move further into the winter, and then, I don't know what's going to happen with daylight savings. So I was saying, like in the winter, it's going to be pitch black behind me. So it's going to look great. But I don't know what daylight saving, now we're doing the time that we're not going to change times. And so it'll still probably be close to dark, just not as dark I still don't know what we're going to do with that, but I am back. Apologize for the absence. It was a very, I not only moved the podcast studio, I actually moved from where I was living to another location. So, and then of course I got sick right before the move. So there was a lot going on in July. All right. But I'm back, and just in time because we do have a Fed meeting that is happening later today because I'm releasing this on Wednesday morning. So we got a Fed meeting, second Fed meeting with Kevin Warsh's chair. So we're going to talk about that. But first, let's talk about rates. So it's been a while. Rates have not been doing great since the last of the show. In fact, I was looking at my newsletter and the last one that I sent, and I think rates were at like 4.4 something. And today they just fell under, I think they closed the day around 4.6%. But at one point last week we were about 4.7. And so rates are up a little bit, but we've had a good three straight trading days. Rates have fallen. So that's good news, but all bets are off on what is going to happen today. I feel like today we are more in the dark than we've ever been. And a lot of that's by design. And once again, we're going to talk about this with Kevin Warsh and sort of what he's going to do as head of the Federal Reserve. But the good news, like I said, is that rates are down the last 3 trading days. And so now we slightly dropped below 4.6%. So down almost 10 basis points from the high that we saw last week. So why did rates fall? Well, a lot of it has to do with the Middle East. And sort of the calm that we're seeing in the Middle East. There's this kind of running joke on Twitter about how whenever the 10-year starts moving closer to 5%, Trump pauses things. And I mean, there's no doubt. I mean, it's a joke, but the reality is that the president is watching the markets, maybe more so than even other presidents have. They all do, right? No president wants $100 barrel of oil. No one wants the stock market falling. No one wants high borrowing costs, bond yields rising. No one wants that. Trump might be even more aware of that, but there's no doubt that, that plays a part. When we saw oil prices last week jumping up, I mean, there was really, I think, a push for Trump to kind of calm things down in the Middle East, and things have been relatively quiet. As usual, we're hearing all kinds of reports. Trump is saying, hey, talks are going well, we're talking, and Iranians are saying we're not talking. We're not going to attack if they don't attack, but we control the Strait of Hormuz. Trump still with the blockade, and so it's a lot of he said, she said. And so that is what's been calming markets, because the data that we've gotten this week has actually been somewhat strong for the economy. There's sort of this underlying strength to the economy. Even though there's a concern about it, there's no doubt, there has been sort of this underlying strength. We saw a report from the Wall Street Journal about how companies are hiring again, that this whole idea of, AI, everyone's going to get fired. While I guess maybe one day possibly going to happen, maybe they were a little too quick to fire people or not hire people. And so a lot of companies are pivoting with their AI strategy, and they're hiring people. Durable goods order was better than expected, but still somewhat weak. And then today, sort of signaling the concern among consumers, at least for the present economy, consumer confidence fell to a 6-month low. This according to, of course, the Conference Board. Conference Board Consumer Confidence Index fell 1.4 points to 90.8 in July. That was down from an upwardly revised 92.2 in June, and is the weakest reading since January. I think we were like in the 80s. By the numbers, the decline was driven by worsening views of the current economy. The present situation index dropped 3.6 points to 114.9, its third consecutive monthly decline, while the sort of 6-month outlook, while bad at 74.7, didn't change. So people aren't feeling pessimistic about the future. They're feeling pessimistic about right now. There's concern about what's happening with the economy right now. And not surprisingly, it sort of breaks along lines that you would think. Confidence remains strongest among consumers under 35. Young people tend to be more optimistic than older people. Higher income households continue to be the most optimistic, while confidence among the silent generation weakened the most. The survey also highlighted political differences. Confidence softened among independents and Democrats, while Republicans became somewhat more optimistic during the month. So, I mean, that's definitely going to help rates. There's no doubt. But that, along with the calm in the Middle East, I think, is why you've seen the last 3 trading days a drop in rates. Now, the last 3 drops haven't countered last week, where Monday, Tuesday, Wednesday, Thursday, 4 days in a row, we saw an increase. Those increases were higher than the 3 days of drops that we have seen. But like I said, today we did drop. We didn't close below 4.6, but at one point we were there. So that was the good news. And then also we got Case-Shiller home price growth that was better than expected, but still nothing to write home about. So the S&P Catality Case-Shiller U.S. National Home Price Index, it's a long title, was actually up back above 1%. It had fallen below that last month. 1.1% year over year home price growth. National index up from 0.9% in April. So this is May. Remember that the Case-Shiller is very, very behind. The closely watched 20-city index climbed to 1.6%, which topped economists' expectations of a rise to 1.3 from the pace that we saw in April of 1.2. Now, even with the increase, it's important to remember that while we are still seeing home price growth, it hasn't gone into the negative yet. In real terms, it is, because inflation is up 4.2% year over year, looking at the May data. And so home price growth is up 1.1%. So home prices are down in real terms by about 3%. So there is, you got to take that into account as to what is happening with regards to money. Home prices are technically down. Not if you're in Chicago. That still remains the hottest housing market. Third straight month, home prices up 6.9% year over year. New York followed suit, 4.2%, and Cleveland rounding out the top three at 3.1%. Meanwhile, Las Vegas down 1.9% year over year. Seattle down 1.8%, and Seattle and Denver down 1.8%, and Tampa was down 1.6%. So you are seeing some markets that are in the red. Nationally, though, we are still up, but like I said, when compared to inflation, not so much. All right. Today's a big day. Kevin Warsh, second meeting. And as I mentioned before, I don't think we've ever had this much uncertainty going into a meeting. In fact, looking at the latest CME Fed Watch tool, while the numbers are down, at one point, I believe yesterday or Monday, at one point, I think the CME Fed Watch tool had the probability of a rate hike at 40%. That number is down to 31% the night before, or the night of the first meeting day. They do start meeting on Tuesday. So that number is still, still got a 2 in 3 chance, or I should say, over 66% chance, 68.5 of them not changing rates. That is a very high number, 31%, even 31. 40 was obviously kind of surprising to a lot of people because I think it was Joe Weisenthal from Bloomberg who said, when was the last time that we saw them pricing in a 40% chance of a rate hike? And it was probably the last time they hiked rates back in 23. So, a lot of uncertainty going into this, and probably by design, which we're going to get to in a second. But what's interesting is Citadel Securities, of course, Citadel. Ken, what's his name? I'm totally playing. Who's the Citadel guy? I can't believe I'm blanking on this. One of the most successful hedge fund guys. Ken Griffin. Ken Griffin. I wanted to say Ken Dahl because he's the mayor of Wrightsville Beach. I was like, wait, it's not Ken Dahl. Ken Griffin. Is the head of Citadel and crazy rich guy. Zoran Mondami, mayor of New York, doesn't like him. Doesn't like that he buys real estate in New York. But smart guy, no doubt. So Citadel Securities. Now, Ken Griffin didn't say this. This is one of his analysts. But they are, my point is they're a trusted firm. I mean, they're big time. No doubt about that. And they are actually projecting a rate hike, a surprise rate hike. A 1/4 point increase on Wednesday, Citadel argues, would reinforce Warsh's repeated pledge to restore price stability while showing policymakers no longer rely on signaling every policy move well in advance. That's according to Frank Flight, the firm's head of macro strategy, in a note saying, quote, the market may once again be underestimating the extent of the hawkish shift at the Fed. A hike this week, quote, would emphatically end the forward guidance era while underscoring the Fed's independence. A move this week would have a greater impact than waiting until September because it would reshape the expectations about how the Fed responds to inflation. In addition to supporting the central bank's inflation-fighting credibility, a surprise increase would influence businesses' pricing decisions and workers' wage demands before inflation becomes more entrenched, potentially reducing the amount of tightening needed later. So, I mean, they're basically are, and I don't totally disagree with that, where they're saying, one, Kevin Warsh is making it very clear he does not want to telegraph any moves, make any kind of signs they're going to be doing something. And so doing this when they gave no indication of it would very much so prove that they're not going to telegraph their moves. And, it could cause people to say, whoa, okay, they're taking the fact that we're still above the target rate very seriously. Now, of course, one of the problems with this inflation data is that it is so kind of difficult to read because these reports are delayed. And usually by the time we get them, whatever caused that move up or down has usually changed because we're talking about a war. And so, the last reports we got were based off of the ceasefire, and the ceasefire is over. Or at least the last one was. So then they started fighting again. It was like 13 straight nights. We were bombing Tehran, and then Iran was, of course, going after ships in the Strait of Hormuz, and that was lowering the overall movement and therefore causing oil prices to rise. And now we're sort of back in a not written ceasefire, but it seems like things have calmed down. So now if we're getting data that shows that fight over the last 2 weeks, that could be no longer. And so that's one of the problems with the inflation data completely. And so they're saying, that would sort of say, hey, we're taking this very seriously. We're not kidding around, and we're not going to let you know what we're going to do. If we need to hike rates, we're going to do it. A lot of times people forget that back in the day, the Fed used to sometimes, not frequently, but they would do a hike in between meetings if they felt it necessary. And that seemed, after, of course, all of a sudden after the financial crisis, and Bernanke really kind of spearheaded this idea of forward guidance. That, of course, continued with Yellen, and then, of course, with Powell. The idea of them doing something like that and spooking markets, almost no way. And Warsh, I could see him doing something like that. He really wants to be like, we're not going to say anything. Now, just to give a counterpoint, Robin Brooks, Brookings Institute, on his Substack, said, quote, "I don't believe even for a second that Kevin Warsh will fall. Try this again. Rewind. I don't believe even for a second that Kevin Warsh will fall into the trap of hiking. This would be a huge mistake because it would wildly inflame the narrative. Some are pushing that the Fed is making a hawkish shift in reaction to function under Warsh. So this idea that because Trump doesn't want the Fed to raise rates, they're going to raise rates to show that they're not intimidated by Warsh or Trump, which would actually be a problem because then they would sort of be arguing, we're just doing the opposite of whatever Trump wants us to do. So what if Trump comes out tomorrow and says he wants them to raise rates? Are they then going to lower rates? And so Brooks is saying, you don't want to fall into that trap where it's like, we're so against Trump that we're just going to do the opposite of what he wants, even if it's not what we should be doing because of what the markets are telling us. With inflation benign, a hike would cause markets to go crazy with this narrative, and they'd price more and more hikes, backing the Fed into a corner. He says it's better to steer clear of such a disaster, and I'm confident Warsh has the wherewithal to do that. In fact, it's my view the Fed won't hike at all in 26 or 27. So point, counterpoint on what the Fed will do. What do I think? I have no idea. I don't even pretend to have an idea. I'm just giving you what other people, smart people, much smarter than me, are saying. I tell people all the time, even my clients, when they say, what do you think rates are going to do? I'm never going to tell you what rates are going to do. I'll tell you why rates are doing what they're doing. I can do that. I'm confident in my analysis. I can tell you why rates are up. I can tell you why rates are down, tell you why rates are stagnant. I will never pretend to tell you what rates are going to do. There are people on Wall Street with billion-dollar computers who cannot tell you what rates are going to do. You think I can with this computer? This computer? No. I'm not going to pretend I can do that. Great. We don't have time to get into it. Maybe we'll talk a little bit about it tomorrow. But Colby Smith had a great piece in the New York Times about the Fed and, sort of this test that he's facing right now. Actually, let's jump into it. We got, I haven't done a show in a while. Let's go a little longer. She says, Kevin Warsh faces a pivotal choice this week at his second meeting as chairman of the Federal Reserve. He has staked his reputation on getting inflation down after half a decade of it running too high for the central bank's liking, which is crazy to think about. It started going up in 2022. COVID's totally warped our brains. But when I just read that, I was like, wait, half a decade? I was like, what's that? It wasn't up before COVID. And I was like, oh my God, it's 2026. It's been hot for 4 years, almost half a decade. Woo. All right. Bring it back now. Wednesday's decision offers Mr. Warsh his real opportunity to assert himself with risks in both directions. He says corralling his colleagues to raise interest rates would be a surefire way to keep in check the public's expectations about inflation while silencing critics who question Mr. Warsh's appetite to go beyond talking tough to curb price pressures. So kind of agreeing with, she's not agreeing, she's just pointing that out. Same argument that we just heard from, what was his name? Frank Flight. It's like a superhero. Yeah, Frank Flight. Superhero alternative identity, secret identity name. Frank Flight. A rate rise on the heels of relatively benign inflation data has the potential to sow confusion about how officials will respond to shifts in the economy, testing financial markets that are now already jittery amid volatile energy prices. But she has a good piece. She goes on, kind of breaks down all of the things. And then, of course, Nick Timiraos, a.k.a. the Fed Whisperer, which I still believe he has that title. Still talking to a lot of people on the Fed. He says Kevin Warsh wanted a good family fight, and he's getting one at the Fed, he means. And he talks about this great story about how I guess he had dinner with, the board, and he talked about how he's going to do this committee, these, what did they call them? The panels. Yeah, it's committee panels. And Governor Christopher Waller, a former econ professor with a reputation for saying what others won't, Timiraos notes, put Warsh on the spot, according to several people familiar with the dinner. What's the point of all of this, he asked. Tell me who you're putting on these groups, he said, and I'll tell you what they'll say. There were no brilliant ideas out there that everyone had somehow missed. Last month's dinner time exchange, Timiraos writes, was in one sense exactly what Warsh says he wants, a good family fight, and the phrase he often uses, over outcomes not settled in advance. The 5 Fed task forces, that's the word I was looking for, on communications, its inflation framework, and its asset holdings, among others, are meant to reopen questions Warsh believed central bankers in the economics profession had stopped asking. But there was one good point that Timiraos gets into here, where he says that, Warsh is really trying to change the way the Fed looks at forward guidance and being a little more opaque with what they're going to be doing. And that's why you got people like Flight and, Colby Smith mentioned this, sort of maybe them making a move that the market really wasn't anticipating. Kind of, not entirely. Majority think they're not going to raise rates. Would be that signal that the era of we're going to tell you 6 months in advance what we're going to be doing is over. However, and Timiraos talked to, what was his name? It's in here somewhere. William English, former director of the Fed's Monetary Affairs Division, doubts this idea of being tight-lipped, which Waller criticized in public 4 weeks after the dinner, saying, quote, in all my years as an economist, I've never seen a single theory that says you make people's lives better or markets work better if you don't tell people what you're thinking. William English doubts the approach can last as well, saying a chairman who avoids discussing the outlook can't explain the committee's decisions and surrenders a tool for steering it. Chair Warsh is going to find at some point that he just has to talk about the outlook. So this is, we say this all the time, like, this could be a really exciting meeting. I feel like this one is more so just because we don't know what's going to happen. So whatever they do is actually, because of the lack of signals, we're going to look for them. And so the signal will be if they don't cut rates, or if they do, or if they don't move rates, or if they do a surprise hike. Both are going to tell us something more than what we know now, which is nothing. And then, of course, how long is the press conference? I guess he is doing a press conference, and we'll see how long that lasts. But it's good to be back. That's all I'll say. Hope you didn't miss me too much. All right. That's it. We're done. First show back. It's going to be weird. I don't love the low profile boom arm. I like the big one that you can kind of move around. Not the big one, the one that's like, the overhanging one versus the low profile. I guess are those called high profile? These are low. I know these are called low profile, so I guess the other ones are called high profile. I like that one more. You can move. It was on the radio. We had that. You can move with it and adjust it, and it's harder to adjust this one. So I'll get used to it though. I can't have this big giant boom arm on my desk, so I have to have a low profile one. So it is what it is until I get that studio built. Once I eclipse Joe Rogan's audience, then I'll be able to build that studio I've always wanted to. All right, you guys enjoy Fed Day. Enjoy your Wednesday. We'll be back here Thursday morning discussing the Fed meeting as always. But you guys enjoy it. And remember, as always, do not wait. You buy real estate and wait.